What's going on, everyone? All right, today, another trade recap here for Monday, April 1st, 2025. So, got a good one today. Another good one. This market has been beautiful. This has been going good. And I will always say, if you're struggling, hang in there. Hang in there. All right. If you're struggling, I know not everybody is doing, great. So just don't let it get in your head. Just keep hitting the study books. Just whatever you're doing, keep studying, stick at it. And just know that, well, in my opinion, most people are only going to fail when they quit or when they stop studying and trying to improve, right? I've been in this for 5 years now. A little over, last month was 5 years. And there's many times I wanted to quit. Many times I thought I couldn't make it. Many times I questioned and asked myself, like, am I wasting my time? Is this ever going to work for me? And, what I found, and that's why I do these videos. That's why I'm on YouTube. That's why I do these, social media videos and postings, is to encourage people, because there was people when I was new that were making it, and I kept telling myself, if other people can do it, why can't I? Why can't I? So the same thing for you. If you're watching this, if you're struggling, you can also do it. It's not a pipe dream, as long as you know that it's not a get rich quick thing either. It will take time, and just stick with it. Stick with it. All right. So let's dive right in here. Here's the weekly chart. When I talk about things, a lot of times I'm going to reference the day before, unless if I was out and didn't trade some days, or maybe there's some days that the market wasn't good. But anyways, here's that weekly. We're on the weekly chart here, that weekly fair value gap that I keep mentioning. All right. So we had a potential gap here where obviously this is only going to form if we would close down this week. But again, this was that swing I was watching right here. We took that swing. Okay, then we had another fair value gap right in here. There's some imbalances, so I got to include the bodies here. Okay, and let's see, right in here, we traded right to the midpoint there. All right. So now my job is to wait and see if we're going to continue down or if we're going to pull up from this point. All right. So that's kind of what I was looking there. Let's go to the daily chart. Okay. Again, now I jump down here. This is the current day, Tuesday. I'm sorry. This is Monday here. So yes, the current day is Tuesday, but this hasn't closed yet, right? So, I mean, it has, but while I'm trading in the morning, this hadn't closed. So I can't look at this candle right here yet. All right. All I can look at is here. And what do you see? So I immediately, and I mentioned this yesterday, I'm attracted to this right here, this volume imbalance. And let me make sure. I made my camera a little bigger, so I got to be sure that I don't drag or show something that I'm blocking. So yeah. So I was attracted to this already, this volume imbalance. But then you have a gap in here, right? You see this? You have a gap. So you include it all right there. So we have that daily fair value gap. Now, we also have this portion right here, right? That portion. But then what do we have here? Another volume imbalance. So you got to include that. So it's like, oh, wow. Look at all that. So you can leave it like this, or what I like to do is you can just take this and just have this entire amount right here. Okay. So I tend to like to look at it more of a separation in this case. But either way, let me see something. Hold on. All right, I had some setting off or whatever. But yeah. So anyways, so you see, I'm immediately like, okay, price, here's our open right here. And we were kind of in this area, whatever. So I'm like, okay, are we going to pull up into this daily fair value gap and then continue down? Or like, how high can we pull back? Because really, we could pull back all the way up into here, right? Even if I just left that in balance, whatever. We could pull back to the consequent encroachment here. We could pull back up here. Like, there's areas we could pull back, right? Look, we even have this volume imbalance, inversion type volume imbalance there. But so I'm like, all right, I'm expecting a long right off the bat. That's basically what I'm looking at. I'm looking for price to pull back up into this because we had this low. If I mark out that low, and if I zoom back out a little bit here, we came back down, pulled up, took this low with displacement. So yeah, we could just continue down, right? Continue down somewhere. Or we could pull back up. Why might we pull back up? Well, if it hits a level down here, an imbalance or liquidity. Well, what did I just show you? That weekly chart, right? So that weekly fair value gap, we went into it and then it starts pulling up. So, hey, I can expect it to pull up probably either to the midpoint of this, maybe even up to this imbalance. Typically, price is not going to allow or like imbalances like this on a higher time frame like that to stay open for very long, right? So like over here, we had this imbalance and we only stayed above it one day. And then on the second day, we came back and touched it there, right? And then the third day, traded through it, fourth day, all the way through. Not saying that's exactly going to happen going up, but it's something you have to anticipate. Everything's about anticipation. So if I'm anticipating we could go here, but I'm definitely believing we could go at least to this midpoint somewhere in that area. That's what I'm anticipating, right? So then drop down, always glance at the 4 hour to see if there's any gaps, fair value gaps or any kind of gaps. And there is. So you can see us pulling up inside this one. And if you pull it all together with this imbalance here, okay, we got all that in there right there. Okay, so I just kind of want to see where it is. I don't really go too much off of that. But then here we have the 1 hour chart. All right. So this is 10 a.m. So I was looking at this low as a potential sell side and this low right here. Okay, I was looking at this area. And then if you look, this bar hadn't closed yet. So we hadn't went all the way up because this from 9 a.m. to 10 a.m., that's that 1 hour, right? So I had that. And then what did I have here was this for my buy side right there. Then if you look, if you go all the way over here, you had this high as well. So like literally this could be buy side liquidity right there. And then we had, what did we have here? Right there. A 1 hour fair value gap. Boom. So if you could see this midpoint right here of this fair value gap, let me make sure I'm not, there we go. Wicked right up to the midpoint, right? And then dropped. Got here into it again. Back up right here. Created relatively equal highs. Okay. And then on the other side here, we had, where were we? At the time, we had this fair value gap as well. Where price came down, wicked through, basically rebalanced, came down, and then went up. I'll show you what I was looking at there here in a minute. Then we had this one here. This was kind of like my markup. Okay, let's see. We took all these highs over here to the left with displacement, traded back through, made a higher high, traded back here again. And I'm like, well, I mean, this is pretty much balanced. We traded through it so much. So, but I had it marked. This was kind of my framework that I was looking at. So then if I drop to the 15-minute, here we go here. Now I'm looking at this like, okay, here's our relative equal highs. Here and here. But watch this. If I bring this wick over that I marked right here. If I measure this wick right here. You see how we went up into this 1 hour fair value gap, came down, and then this wick right here reached the midpoint of it, and then we dropped, right? So I noticed that. And then here, we came right back up to that midpoint again. Okay? And we dropped. So I'm looking at my 15-minute chart here. And this is where I had that first point of sell side liquidity. Let me go ahead and label that so we don't get any confusion. Sell side, right there. And then right here is where I had that buy side. Let's see where. No, I don't want that one. There we go. We had that buy side liquidity right there. All right, so that's what I was looking at. So let's go into this. Right here, 6 a.m. Look what we had here. So that was like the bigger picture. Now we start getting into the nitty gritty of the framework, all right? So I had that 1 minute framework. And then now the 15-minute, I want to look, basically, I don't want to look from like, here's 6 a.m. So if I look at for this day, right? Where are we at? Midnight, right here. So if I look from here to the right, that's the new day, right? Because that's midnight. So after that, what do we see? What do I see? I see this high right here, and then I see this high. Could you say that's relatively equal highs? Yeah. And then it pulled down, right? And then it pulled up here, taking these highs. So I want to point this out for a reason. Right there. Took these relative equal highs, right? And then what did it do after that? Displaced down. Let me get rid of this 1 hour fair value gap so you can see what I'm talking about. Displaced down. Where? To this 1 hour fair value gap. Okay. What was this line? I don't remember what this line was. Let's get rid of it. So it displaced down. What does displacement mean? Where it drops like this, leaving this fair value gap and taking this low, right? So it displaced down. And what also did it do here? Created an inversion right here, right? This is an inversion. So that's telling me, okay, it delivered well up right here. Took this buy side, did that, right? And then from here, since it delivered well right here, this high is going to be our new buy side, right? We still have this one up here that I marked, right? But this can be our new, or not buy side, but relative equal high, right? So this here, then the higher high is this one right above it. So I just wanted you to see a visual of how relatively equal high they are. Right here, 511, 518.50, right? 7 points off from each other. Okay. So now I see that, and that's at 545, right? So it does this, and here's the open right here at 930. So in my eyes, we open, and I see us go up into this inversion right here, and then we go up right to the midpoint of this fair value gap, this 15-minute. So immediately, I'm like, okay, if we are going to trade higher, we need manipulation. Remember that, y'all. We always need manipulation, right? I don't do anything in the middle here. I look for manipulation. If I'm expecting price to go buy side, I need manipulation to the sell side. If I'm expecting price to go sell side, I need manipulation up, right? That's that simple. And if I don't get it, I don't trade. That's it, right? So let me, 1 second. Let me remove that. So immediately, since we delivered up here like this, I'm like, okay, look at the bodies right here. Look at the bodies. Wick, right up here. You got the close, open, came down, open right here. Like, look at this action. I'm like, okay, we're likely to head down because we just delivered up here. Right up here is delivered nice, right? Displaced down right to the midpoint here. Okay, I have a full, and we still haven't closed on the other half of this inversion. So I have a full expectation now that we're going to come down and sweep sell side. Now, do we reach down into this 1 hour fair value gap and take this low, which was that sell side, or do we go to this lower one? I'm not sure yet, but that's why you wait and find out. So let me get rid of this 1 hour because I also want to highlight this 15-minute one that I had here. Boom, right there. All right. So I'm like, we're going to go down here. We're just going to go down here. So basically, in all this action right here, this is telling you, this is currently, so, well, we had 10 a.m. news as well. But this right here is telling me this is high resistance conditions right now. Like, this is not anything I'm looking to trade just yet. Even more confirmation that, hey, I need a sweep down here before I can go up. So that's what I'm waiting on. All right. That was my framework as soon as I saw this happening. So from there, as price does try to come down, that's when I drop to lower time frames. I know, and that's when I drop to lower time frame. Like, I literally can stay right here in this 15-minute chart until price reaches here or here. That easy, that simple. Okay. And so then I drop down to my 1 minute and let me pull up my actual chart I traded on so you can see my execution and the rest of my markings. Here we go. You can see right here. So let's look at this. So this is where price opened. Right back here, 9:30. And you can see, like, look at all the wicks. Nothing good yet. Oh, that's a 5 minute. Go to the 1 minute. There we go. That looks more like it. That looks more like it. So we opened back here, 9:30. You can see we opened, did this action. Look at all this action. Just ugly. Look at all the wicks. Look at all this. Like, do you really want to take a trade in that? Probably not. And then we finally ran up here, and that's where we got our first presented fair value gap, finally. And that's when we hit that middle of the 15-minute fair value gap. Right here. And then came down. 1 second. I have my something beeping, and I don't know if y'all can hear that or not, so let me mute it. All right, so then we came up, and then we had the news here at 10. It caused some volatility. This little gap wasn't there, so I think I must have had a data blip, but that wasn't there at the time. So anyways, we did that, and hold on, let me erase this because I don't like too many things in the way. And I was already waiting, like, I either need, like I said, price to run up here, sweep here first, and then come down, or sweep here first and then go up. But since I liked the way it delivered here, I saw this first presented fair value gap became an inversion. So since it became an inversion, I want to see how it holds. Well, it held here. And if you're truly bearish and it was, had a different trading model, that could be a short. I mean, there's many different ways to do it. I don't do it that way. Came down, pulled up. Oh, And right here, we had the opening range gap as well, which somebody, one of my subscribers on my last video asked what the opening range gap is. So I will hang around after I'm done here. At the very end, I will go over what that opening range gap is. All right. Very simple. But pulled up in here. We closed that opening range gap. Started making our way down. Had this little volume imbalance here. This is where we reached into that 15-minute fair value gap. And then once we're in this area, this is where I look for my market structure shift, my fair value gap, all that good stuff, my entry, right? So as soon as we come here, I'm starting to look. Do we have a fair value gap going down, a bearish one, a SIBI, anywhere? Because I want to mark it and see if we invert it, if it becomes an inversion. I'm trying to get my lingo right. So we came down here. Didn't have any fair value gap. We had this volume imbalance. Pulled up. Made a lower low right here. And then came back up where we still didn't have any inversion created, but we had this swing right here, okay, that I was watching. We also had this swing over here. But since we drew down to this area here, we came down, made a high, lower low, and then took this high right here. Could be a breaker right there. But also with this displacement through this high, left this fair value gap right here. That's what I'm looking for. Took this swing, left this fair value gap. We actually took this swing as well, which I like that because that's an even higher swing. See that? We closed there. Why is this marked this way? There we go. We closed up here, and then we opened, reached up, came down. So when we reached up, we took that swing, traded through this volume balance, and then we hit this fair value gap right here. And that's where I got in. Where am I targeting? The low-hanging fruit. Did I believe we're going to go all the way up and take this buy side that I had? Absolutely. Absolutely. Without a doubt, we're going to take that. Am I going to hold my trade through all that? Not at all. Could I? Maybe. Yes, but no, I'm not. I don't need to. I take the low-hanging fruit. I want to get in and out. Done. I'm trading 20 funded accounts that have pretty good balances. That's all I need. Plus my live personal account with my broker is my leader. Like I'm doing fine without having to go through all that. So I get in here right there. Why is this the low-hanging fruit? Well, this is internal range liquidity right here. We have these highs, fair value gap. And, there's a lot of reasons. We got last week's low right there, midnight opening price, 8:30 opening price. Bam, right there. That's my target. Now let me show you another reason why that was my, target. Because if I take this high right here from the morning, and then I take this low that we just made, where's equilibrium? Equilibrium, in case you don't know, is the midpoint. Well, you can't really see it because it's hiding. Here, let me get rid of this so you can see a little better. You can't really see it because it's right here as well. It's the midpoint. So I'm taking a trade from the discount of this dealing range right here in the discount right up to equilibrium. Boom. Done. Let's go. Let's go home. All done. So that's it. That's what I did. So now let's go right into the video because I always show the video. And then I'm going to explain in a 2-minute explanation what the opening range gap is at the end of all that because it's very easy. It's very simple. All right. So here's the video. At the time, it's 9:46. So it's making its way up. It hasn't hit the midpoint of that 15-minute fair value gap yet. But now it is. Just hit that. So I'm going to speed it up here. Now we're just waiting. I have news because there's going to be news. So I marked this minor sell side in case. And the reason why is because if I do end up getting a trade up here, I don't have to go all the way down to this area, all the way down the sell side. Right now, this is my minor sell side. Okay, I could take my trade right here, call it a day, and be done. Low-hanging fruit. Okay, but we didn't. Didn't get that. Now we're just, you can see it making its way. I'm noticing the bodies here. I'm looking at this wick. Everything's lining up. All right. Now at this point, I'm like, yeah, we're taking this minor sell side. We're just going to go all the way down. Just waiting for that. There's no way I'm taking this fair value gap right here. Now you could. There's nothing wrong with it. Let me backtrack. Right here. We have this fair value gap. If you're very confident we're going to go down here, I mean, you see price trader right up to the midpoint of it right there. It's likely to trade down here. You could take that trade. That's not my model. I stick to my model. Okay. So now we're expanding. We have the bodies right up there that I mentioned. I'm just waiting. There we go. We're taking sell side now. Now at this point, I got to figure out how far down do we go, and at one point are we going to get our market structure shift and all that good stuff. So let's fast forward it a little bit more. Now we're hitting the midpoint of the 15-minute fair value gap. I'm watching this wick right here because see how the bodies are respecting the midpoint of it? It might not be ready to come up yet. Respected the midpoint of it. Makes a lower low. There's this lower low. There we go. Traded all the way through that 15-minute fair value gap. At this point, I'm kind of like, well, if we don't turn around, like I got to start looking for lower objectives because we might continue down. And there's days that happens. And when that happens, I'm typically not going to get a trade. All right. So now, after we made that low, I'm trying to get there. We get here. And then look what happened. This is where we're showing the signs of displacement and taking these swings. So I'm like, all right, here we go. Now we're working on something. You see, I measure with my range fib. Equilibrium right there. I'm looking right now at this point. What I'm doing is I'm looking at where's my target? Where's my stop going to go? I already know where my entry is going to be. It's going to be right here in this fair value gap. So where's my target? Where's my stop going to be? It's well prepared way before I need to get in. I have plenty of time. That's another thing that I like about trading this way too. You have plenty of time. You're not rushed and they're saying, oh, I don't want to miss my trade. I don't want to miss a trade. You don't have to worry about that. Plenty of time. So there we go. Mark that out and about to get this trade here. As you can see, I marked it, but it came back in a little bit. So the gap was already in the gap and I hit the button. Look at that. Wait, hold on. Let's back up. Right here, I hit the button and nothing happened. So I was kind of like, look, back up. There we go. I'm going to click it. You're going to see me click it. There we go. I clicked it and nothing happened. I'm like, okay. So I clicked it again. But I always want to be careful where if I click it and look, hold on. And if nothing happens, I'm cautious to click it again because sometimes there could be a slight delay. And you don't want to click it twice too fast. Now you're in with double. And that's not good because that messes up your money management. But I want to note, look how I get in this trade, right? I'm almost just like yesterday. I'm never in heat. Immediate profit position. Immediate. Like those are the trades that you want. You want low resistance trades. I don't know if this ever came into a losing position at all. I don't think it did, to be honest. And this was of another quick one. There we go. I zoom in a little bit for all to see. There's my P&L with my PA Apex accounts. I could add my personal account in there as well. Maybe I'll play with that and see into that dashboard. I just obviously don't want my personal information being displayed. I need to play with that and see. But I am up to trading 4 micros on my personal live account now. So like yesterday was $300 and something profit. Today was like 250, 260, somewhere in that area. All right. And we're about to go up there. Let me fast forward a little bit more. There we go. There we go. Let me back up. Yeah, because it just pops on up there. This wasn't the biggest one. This was only like 36 points. But again, remember, 35 to 60 points is my target. There we go. There we have it. All right. That was it. $8,500. Good job. Good day. Now, let's go right into that opening range gap. All right. The opening range gap. Let's make this really simple. We're going to go. Okay. There's going to be different ways to do this. I use TradingView. Very simple. Easy way to do it. Depending on what platform you're on, there may be different settings. But all the opening range gap is when the market closes the regular New York Stock Exchange, if you're on the indices, the time that closes until it opens at 9:30 in the morning. All right. So for TradingView, all you do is right here on the bottom right, you have electronic trading hours and regular trading hours. Okay. That's the session. If you go to regular trading hours, let me scroll back to the morning. You see this right here? See this gap? Right there to right there? That's your opening range gap. Because if you hover over this bar, look at the time, 16:14 on Monday, March 31st. So that's when the market closed that afternoon. Closed right here. Okay. And then where did it open? Right here. This is the opening because it's a down close candle, right? So that's the opening. And look at the time, 9:30 on Tuesday morning. So the day before when the market closes to opening the next morning. So all the overnight, all the Asia session, London session, all that overnight is cut out of this. And that's what you call the opening range gap. Not the opening range. The opening range is between 9:30 to 10 a.m. regular trading hours, or just any trading hours. 9:30 to 10 a.m. That's the opening range. The high and low, whatever. But this is the opening range gap. So that's how I mark it right here. You have the close right here. Because on an up close candle, the close is the high of the body. And then right here, the high of the body is on a down close candle, the open. So it's the open. So the close, the day before, and the open. And then I have opening range gap right there marked. And then the midpoint. So you have the close, the open the next morning, and then the midpoint. Right there. So that's your opening range gap. And then if you go back here, you have it like that. So then whenever you go back to electronic trading hours, it'll keep that level there. And then there's some rules that go around that as well. So that's it. And if anybody else has any other questions, anytime I'm doing these trade recaps, leave it in the comment. Leave that question in the comment. And what I'll do is I'll answer it to the best of my knowledge and, what I know on the next video, the next recap video. So that's, I made that deal with everybody because that way I'm not doing I'm not doing live streaming. I'm doing these trade recaps. This is where you can really learn stuff. And anytime you have questions, just leave it in the comment and I will address it on the next video. All right. So that's going to be it. That's going to be on this one. We'll see how the rest of the week goes. I believe it's NFP this Friday. So we got to be careful as we get closer into Wednesday, Thursday, Friday. Today's Tuesday. So I'm already going to take caution. All right. So yeah, that's that. I hope everybody has a great rest of your week. I hope you get something from this. And as always, trade well, everybody. I'll talk to you later.
Yeah.